Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So it's a great week. It's a new week. We are expecting a lot of volatility to be happening this week. So be ready to take on the markets. So as a teaser, we'll be having a very slow and quiet Monday. We are not expecting any major news to be happening today. So a majority of the news will be happening from Tuesday through to the end of the week on Friday. So before I make any progress, I would like to begin with a mic test. So kindly respond with a hi on the comment section to confirm that everything is working just fine. Awesome. So let's progress. The key highlights for this morning is that we don't have much happening. So let's look at the Asian session summary. So the Bank of Japan is anticipated to maintain the status quo at this week's meeting for a number of reasons, including less distorted bond market, persistent wage stagnation, and the possibility of an early election. In May, the rate of increase in producer prices in Japan slowed to the lowest level in over 2 years, pointing to an easing of inflationary pressures. The Bank of Japan said on Monday that a gauge of input prices for Japanese businesses increased 5.1% in May from an year earlier, the slowest reading since June 2021. So after weaker than expected expenditure in the first half of 2023 and declining energy prices supported GDP, UK economic experts are rethinking their predictions of a recession. An official from the Bank of England advised the UK government to change the focus on economic policy from being a quick fix to one that is more sustainable. On the other hand, oil continued to fall as Goldman Sachs lowered its price prediction amid ongoing worries about the demand outlook. So that's the summary for this morning. And now we look at key things happening in the economic calendar before we proceed with the rest of the presentation. So hello, Patrick. Hello, Ali, Charles, Okumu, Joe, Kevin, Masharia, Victor, Abel, and Rodney. Good morning, everyone. Thank you for joining the session. So let's look at the key expectations for the day. So from the economic calendar, as you can see, first things first, it's a bank holiday in Australia. So we expected low, very little volatility coming from Australia. And for the rest of the day, we will not be expecting much to be happening in AUD pairs. So besides this, we have a couple of news that have happened early this morning. So I already mentioned that the producer price index year over year slowed down to 5.1% from a previous reading of 5.9%, and of course, an expectation of 5.6%. So this is indicative of prices slowing down in Japan, basically easing the the inflationary pressures. So later on in the day, we'll be having a speech by MPC member Mann in the UK at 5 p.m., US 10-year bond auction at 8:01 p.m., and of course, the federal budget balance at 9 p.m. in the US. So these are low impact news. So we don't expect this to be influencing the markets with big spikes or anything like that. So it's a really quiet day, which is basically a paradise for any technical trader out there. So on Tuesday, we won't be having much besides the jobs data from the UK. So the claimant count change will be very important. Also the average earnings index and the unemployment rate in the UK. Before we look at the German ZEW economic sentiment data, then later on, we'll be looking at the US CPI at 3:30 p.m. So tomorrow is when we start seeing the big volatility coming back in the markets, especially considering the CPI, which, as I have been saying, is the new NFP. So everyone in the markets will be observing the CPI data to see whether US inflation drops from 4.9% to 4.1%. So we know that the Fed is meeting on Wednesday. This is when they'll be announcing the US interest rate data. So it's expected to be the most explosive event of the week. So the FOMC economic projection statement, federal funds rate, and of course the FOMC press conference. So before this happens, we know that the Fed will be focused on the inflation numbers. So their main target since last year has been controlling inflation, which they have done a really good job, lowering it from 9.1% to the current 4.9%, but there is still more room to go down until they get to the 2% target. So if this reading for May comes in stronger than expected, then it's overall consensus that the Fed may go for a rate hike, and that would strengthen the dollar and weaken equities. But then on the other hand, if the inflation rate drops as expected, then in this case, the Fed could consider to pause rate for the first time since March last year, or basically in 10 consecutive sittings, the Fed has been hiking interest rates every time. So if they choose to hold interest rates level, that would be quite detrimental to the dollar, but then it would be very positive for US equity markets. So for now, we focus on what we have for the day. And at the same time, there's also the earnings side. So we don't expect anything big or huge to be happening in earnings. So we are on low seasons on the earnings sector. So we will be expecting two major highlights. So first, today, at the end of the market or the close of the US market, we will be receiving earnings for Oracle company. So this will kick off a relatively light week for corporate earnings, with the enterprise software firm set to disclose is a fiscal fourth quarter results after Monday's close. So analysts on average expect Oracle to unveil earnings of $1.8 per share, that is earnings per share, up 2.6% year over year, and of course, $13.7 billion in revenue in the last quarter. So that's one of the key stocks that will be reporting their earnings this week. So the other one, which is a key highlight, will be happening on Thursday, and this is Adobe. Adobe stock has a slow start to the year, but share started skyrocketing in May on news that it's adding generative AI technology to Photoshop. So the move builds on Adobe's broader push into artificial intelligence, including the debut of Firefly suite of generative AI models in March. So for everyone, if you haven't checked out the new advancements in AI, especially in Adobe Photoshop, I think it's time you start looking into it. I think it will be explosive, and this could raise the performance of the stock. So there is a good chance we'll be seeing a continued rally. So if this happens in line with, let's say, the Fed going for a rate pause, then in that case, we could be seeing a bull market emerge. So remember, last week, the S&P 500 entered into a bull market, especially after holding into one of the worst recessions since the 1930s. So we know that the S&P 500 has been going down since the January of 2022, kept going down for the entire year, but this year it has made an impressive recovery, and we can confirm now that we are no longer in a bear market. So on the charts side, we'll be looking at a couple of charts. So of course, for those who joined early, we know that the key highlight for the day seems like the USD CHF currency pair. So far, we have had a market that was trading in a triangle. So you can all see the swings and the way they were happening up until the market made a big break towards the lower side. And since then, we have seen continued momentum. So market managed to make a pullback on Friday, and now on Monday, it seems like we are continuing in that same direction. So the big spike that happened here on Thursday last week was as a result of a speech by the Swiss bank governor. He basically mentioned that he is not willing to wait until inflation becomes such a big problem, but instead he's looking to act. And by to act, it basically implies that he's looking to continue hiking interest rates in Switzerland. And this has the result of strengthening the Swiss currency, or what you call the CHF. So as a result, there was a big spike, basically the Swiss franc gaining against the dollar. So a pullback on Friday, and now it seems that we are looking at a continuation. So that's one of the key highlights for the day. And of course, there's an expectation that we could be seeing the CHF continue to gain against the dollar up to let's say this was Thursday's, Friday's low. So 0.89863 remains a key target, and there's a good chance this will happen. So as we always say during these sessions, it's not investment advice, neither is it a recommendation to trade. So we try to understand the key price levels, and of course, you have to do your own due diligence and always practice risk management. So, of course, we have the biggest move of the day, which is oil. So both UK oil and US oil have been really doing well. So I will be expecting some further downside. So by doing well, I don't mean that they are currently rising, but I mean there's quite some impressive volatility. So remember, as traders, we are always on hand for volatility. So wherever you find volatility, then you'll find forex traders. So in this case, we have a very sharp drop happening currently. So since the beginning of the day, we have seen a huge drop here, and this is as a result of the market pricing in potential slowdown in the global economy. So remember last week, the European region officially entered into a milder recession. So Germany, of course, was the first to enter into a recession. So as a result of this, we are seeing a slowdown in the global economy, which basically implies lower demand for oil, which has the effect of lowering oil prices. So as a result, we are seeing some big drop happening since the opening of the day. So we are down 3%, and there's a good chance we'll be seeing some further downside, and a key price target remains $67.2 per barrel. So at the same time, we all know that the OPEC countries are cutting output. So they are trying to support oil to remain above $80 per barrel. The fact that we are seeing oil drop all the way down, there is a good chance we'll be seeing some good recovery. I expect an immediate reaction from the OPEC countries. So well, on the short run, if you are a day trader, this might be the go-to position. But then once we get to the bottom of this, I will be looking for signs for bullish entry. Apologies. So then we have the US equity markets. The S&P 500 managed to break out of this flag and kept going up on Friday. Today seems like a continuation. So it seems like a bullish week for equities. So for the Dow Jones, it managed to form what we call a cup and a handle. So I'll be showing you this. Just remove these accumulated lines. So this was our cup here. This was a handle. So this is often a continuation pattern. So after this happened, we can see that the market opened with a lot of optimism after the break and retest on Friday. So now we're expecting some further upside in the Dow Jones. And of course, for the S&P 500, a break to the upper side. And for the NASDAQ, there was a big sell-off on Thursday. Friday, we made some good recovery, on Wednesday. Thursday, some good recovery. Friday, we completed the recovery. And now we are attempting to push even higher. So last week's high might be a nice target for any intraday trader. So there is a good chance we'll be seeing some further upside happening here. So a price level of around 14,668 could be on forecast for today as we wait for the major news for the week, which is the US CPI and of course the FOMC press conference. So remember, we'll be having 3 central banks releasing their interest rate data this week. So the first one will be the US, that is the Federal Reserve. Second one will be the Eurozone. So the ECB or the European Central Bank will be meeting later this week on Thursday. And of course, the last one will be the Bank of Japan. So the overall consensus in the markets is that the Fed will hold rates. The ECB will hike interest rates, while the Bank of Japan will maintain interest rates at the current level. So there is a good chance we'll be seeing some good volatility coming in the markets. So for AUDUSD, opened up pretty strongly, seems to be pushing higher. So the most recent high seems to be around 0.68147, and now we are seeing the market make a very strong push towards the upper side. So as the dollar remains weak, there's a good chance we'll be seeing the AUDUSD currency rally to 0.68147. So as for gold, we know that it made a surprise recovery here, and this was on Thursday last week. Then on Friday, kept playing up and down. We didn't have much volatility, but now that we are seeing a very weak dollar, then our 1964 price level, which was a key pivot point for last week, is currently being tested. And any breach of 1964 will see us identify a new target, which will be the 1970 price level, which was basically the newest price that we are seeing here. So the 1970 seems like a key price level, especially considering that it was the resistance here and also here. So for 3 consecutive days, we saw gold testing the 1970 price level unsuccessfully, did not manage to break that level. So if we manage to breach the 1964, then 1970 becomes our new target. So as for USD JPY, we have a triangle going on here. So any breakout will be very important. As you all know, in a triangle, as you approach the end of the triangle, you start observing and watching out for a breakout. So a breakout to the upper side, we go long, and a breakout to the lower side, we go short. So this is a wait and see kind of scenario. As for USD CAD, it seems like things are changing. So we are testing a key level support, but in between, we can all see that the market has been unable to break. And of course, we know that there's always a correlation between oil prices and the Canadian dollar. So in this case, what we are seeing is the US dollar being really weak against the Canadian dollar. So we will be observing for any break outside this form of consolidation. So it seems like we have some form of channel forming up here. So we just observe the channel to see whether there's a break. So in this case, if I remove all this noise, then we know that our major support level remains on this line, and the market is currently attempting to break it. So a break towards the lower side, then we go short, but hopefully we could be seeing the market bouncing from here. So we don't know yet. So everyone is focused on the US CPI. So it's a key level support. And if I extend my analysis all the way back, we can all see that if there's a break of this line, then the acceleration downwards could be much bigger than expected. So observe this area for the day, and of course tomorrow and Wednesday, because if there's a confirmed break from the daily chart, it's clear that we could be seeing some further downside. So as you approach the end of the presentation today, we know we have the majors, Euro USD making a strong and impressive rally towards the previous high. So in this case, we're observing the market approaching a major resistance level that we haven't seen in a while. So in this case, we can all see that the Euro USD is attempting to get to this particular trend line, and then we'll make a decision after the trend line. So the key price level for Euro USD remains around 1.07928. Once the price gets here, then we'll be observing to see whether there will be a pullback. So maybe from here, we'll be seeing the price pull back downwards. But then if this doesn't happen, then of course we await to see whether the euro breaks this area and moves higher. So the key decision point will be 1.07928. So for pound USD, very impressive rally again. So we are on the site of a 2 weeks high. So these not 2 weeks, but 5-week high. So the 5-week high is 1.26791. So we are on course to push even higher. So as traders anticipate that the Fed will will pause interest rates, then the result of this speculation basically implies a much weaker dollar and of course a very strong US equity market. So as for the dollar index, we know what has been happening. So a very sharp drop on Thursday, some form of recovery on Friday, and today the dollar index seems to be cruising back downwards. So with all these on your charts, then you know for a fact that this is not a very good sign of continuation. So we are seeing the dollar index now begin to form lower highs. And of course, we are seeing some lower lows happening. So the lower lows can be identified from this sequence of lows here. And there's a good chance we'll be seeing some further downside happening in the dollar index. So lower prices for the dollar index basically means higher prices for the majors. So higher prices for pound USD, higher prices for Euro USD, lower prices for USD CAD, and of course, lower prices for USDN. So Lastly, for the UK index, it seems like we had an inverted head and shoulder, but after completing the pattern, we did not see a break towards the upper side. So the market remains depressed. We saw the market retest the shoulder one more time. So we will be observing this level here, especially considering that there is a UK GDP news happening later this week. So with that, I'll be checking if you have any questions. If there's no questions, then we end the session here. So how did oil news on Friday affect the dollar index? It's not the oil news affecting the dollar index. Actually, oil news tend to affect oil prices. So the dollar index is basically a measure of the strength of the dollar against other currencies, a basket of 6 other currencies. So when you're looking at the dollar index, it's basically a comparative measure of how well the dollar is faring against other currencies. So we might see, yes, on extreme news, oil news affecting the dollar index, but in this case, the key concern for every investor in the market right now is whether the Fed will hold interest rates or whether the Fed will hike interest rates. So hiking interest rates in the US, what impact will it have on the dollar? It is expected to weaken the dollar, to strengthen the dollar. So the analysis behind this, or the rationalization, is that if the Fed hikes interest rates, then it's basically more liquidity being pulled off the markets. So for the people who are paying mortgages, they tend to pay more. For the people who are having credit card debt, then they tend to pay more interest on that debt. So they are left with less money in the pocket. And when overall Americans have less money in their pockets, then that money becomes valuable. So anything that becomes scarce tends to gain in value. And of course, higher interest rates basically encourage savings. So as we see higher and higher interest rates, more and more people will be saving their money, especially in the bond market. More and more people will be saving their money in the money market funds. And as they keep on pushing money out there, then in the economy, there'll be less money, which has the effect of strengthening the dollar. So I hope that makes sense. So hiking interest rates will basically strengthen the dollar, but then hurt equities. On the other hand, if they hold interest rates steady, then the result is quite obvious. We see a much weaker dollar and, of course, stronger equities. Should we expect gold to rise today? Yes, I expect gold to make some form of recovery considering the weak dollar. So remember, this gold is being priced in dollars. So if dollars are weakening, then gold is expected to continue making a recovery. So we are already testing 1964. So now the new target becomes 1970. So any views on stagnation on gold? When you see economic stagnation happening, then at some point, we expect that the central banks will start stimulating their economies, but then they cannot stimulate the economies when interest rates are high. So we will be observing, perhaps in the third quarter and the fourth quarter of the year, when the central banks begin cutting interest rates. So as per now, the interest rates are really high. So economies are set to start stagnating. So for instance, we saw that the NSE stocks, or stocks of the companies trading in the Nairobi Securities Exchange, are really having some bad books. And whenever you see such things happening, then investors will seek safety. So if stocks are really doing well and there's more money flowing in the economy, investors tend to take on more risk and buy those stocks. But then when things are on the bad side, then they tend to go into safe haven assets. So in this case, if there's a stagnation happening, then it's quite bullish for gold, especially on the long run. So that's it for the day. Thank you very much, guys. Thank you for your comments and also for your participation. I hope to see you on the next session. So we will be doing more updates, especially on our Twitter channel. So kindly check out FXPesa KE on Twitter, and we'll be sharing more updates. And of course, the FXPesa Telegram channel. So we will be sharing more updates as they keep on coming. So thank you, guys. See you on the next session.